Greetings, greetings. Welcome to this week's macro measure. I'm Wayne. My partner Ryan has already gotten our market outlooks out for the week. I was traveling and couldn't get back into my office until late here, so going to do a very quick version, which is probably better, honestly. Let's get into the critical slides. We've got a flash here, and then I may have to make an adjustment so that we can see things properly. I'm having a little bit of a fight here with Zoom. There's our trusty disclaimer, and then let's get the intellectual property rights notice flashed. Excuse me, Dirk was actually bringing that up a little bit on Friday on Cocktail Hour, if you call it Cocktail Hour. All right, so with that, everything's flashed here. Let's get into things, and again, this is going to be pretty brief. I want to stop sharing, and I want to be able to show the, let's see, well, I'm getting a big fight on my hands now. I've got all kinds of things moving back and forth. Let's get the right share going. Geez Louise here. Share screen. I want share two. There. This should work. Hopefully this is all working. So didn't really have that much time. Was on the road, so I wasn't able to really have anything to flash technically on Cocktail Hour on Friday, but I did. Ryan noted a lot of things that he and I had spoken about earlier that day, which was good. He was jokingly saying stealing my thunder, but we were just both talking about things. But I did add that I think buybacks are kicking in soon. So there's that soon, not exactly right now. But the other thing I tried to note was that, we know that the seasonality, I'll flash that, but also when folks are just poorly positioned, that really helps out. And when folks are really lagging behind in performance, that really helps the market out typically. So if they are able to goose this thing, then that could really bring a lot of people, kind of force them to get back in off the sidelines and rescue this year. I think it will be a complete sham with respect to what's actually happening out there in the world economy. And I don't think that if that scenario plays out, that anything close to real value, historic valuations will be reflected, but you just can't rule it out. We've seen these guys pull off this stuff way too many times. So having noted that, let me just backtrack and say that I thought last week, and this is where the seasonality flash will come in. Last week, I thought that, where is that? Right here. Oh, well, let me bring this over since it switched it on me. But last week, I thought here we were in one of the last weeks of October. And you could see we flashed these before. These have been in Market Outlook. Ryan's got them in again this week. That the last part of October tends to be rough, especially in a midterm year. And then, excuse me, you can see it here. Things start to get a little bit better in November, excuse me, and then finish the year strongly. And that's why we've been talking about that. And here it is in a different view, a composite midterm election year. So you can see what's going on there. I thought that we would get the best chance for the Bears and really the Bulls to get that flush was last week, but clearly, right, that didn't happen. So if they do go back and start following the seasonality, maybe things get a little bit better quickly, like I think we're expecting after what they pulled off last week. And then we'll see what happens from there. The other thing we mentioned is that sometimes when one party controls the presidency and one party controls Congress, which some pollsters are saying that there's a chance Republicans take control of both houses, that also tends to be bullish for the market because people complain about gridlock and nothing getting done. But again, nothing getting done by Washington can be viewed as a positive in many ways. Well, the market views it that way for sure at times, or at least it seems to. So let's talk about the technicals. That's really what this is all about. And the only reservations I have about this thing right now are that everyone seems to think we now start bouncing. Ryan noted in the Market Outlook how CNBC was absolutely giddy. Of course, they've been talking about a bottom all year long. They've been talking about this thing being overdone. It varies from moment to moment with supposed long-term investors, which is sort of comical, but that's the reality of FinTV these days. Anyway, I thought they'd try to give it that one final washout. Didn't happen. Clearly, right, here's last Friday, the Friday prior, it closed here. they goose things on Monday, take them up further on Tuesday, work them back down, and then re-goose them. Now, my only caveat was there's two really. Was Friday real, right? With options expiration and all the options that expired, did that have something to do with it, with what we saw? But you have to say, absent something like that, look at the volume, look at the candle, right? Came back, broke out above this critical line we've been working with here, broke above the 20 SMA in light blue, above the 10 in white, above the 15 in red, broke out, pulled back, found support really right there, and then went. And that's textbook stuff that a lot of technicians like to see. Now you potentially have a higher low here if it could take these highs out and go. So that's something, right, to work with. I think as a technician, if you're objective, I think you have to be fair about that and say, look, this looks pretty good. The only caveat is, well, Friday was it real, or was it OPEX, overly OPEX influenced? And everyone now seems to think, I can't find many people now who are bearish, which is a little scary. That, and I can see why, from what I'm looking at, well, that there could be at least a march back to the 50 in gold. There could be at least a march back to the 100 in that dashed white line. And there's, of course, up here, a lot of you know that I like to leave just white ovals or something like that whenever there's a critical former gap that is still maybe plays into the mix. And the way things move these days, that can happen quickly. Once these guys get a hold of it, things can be really powerful. And like I said, right, if people are poorly positioned, that can really, really help things in a perverse way, right? Because people really go into scramble mode. People that would rather be selling the market, they're more apt to be forced to buy the market because they're worried about lagging behind by too much in terms of performance. I've seen it before. I'm not predicting that. I'm just saying that we can't rule that out. I'm still a long-term bear. I think what John Nigerian said on Cocktail Hour was interesting, and he's talking to a lot of family offices, and they're not ready to chase this rally. They're not impressed. That just tells me, and again, not to say that they're wrong or his sources are not good. It's just that I can understand why a lot of professionals feel that way, because I still think there's so much fallout to come in this market, in this economy, in the global economy. I think it's the early innings of something bad rather than the latter innings. But the pivot they all think they're sniffing out, or they've sniffed out, it's almost a done deal. That also could fall apart as well. We'll see, right? There's a lot of ifs in all this stuff. But if you look at the snapshot in time right now, and let's say we can believe in Friday, then I have a hard time fighting against this thing, especially if it can start to take off, right? If it could take off through these highs right back in here, which pretty much works out to right about here, right? Somewhere around 380-ish, not too far away, then I really think it should start to work its way up naturally to start testing these higher levels where some of these declining SMAs would come in. And remember, it's been able to shred right through them at times, only to fail, right, and fall right back down again. But closing above this 20 in blue and above this line that I just made blue, that resistance line, I don't want to short sell that. I think that's something we should respect, even if it does have some dubious qualities associated with it. I think you have to respect it. Now, look, the bottom line is, if we return back into this channel that we seem to have left, right, if you fall below this support line in the near future, then I would then flip back over and say, well, that's really extremely poor follow through, right? Maybe you will get a final whoosh, but this was enough to really turn things cyclically, in that a lot of things that were looking really sloppy and ugly, this little maneuver they pulled off, which was really deft, right? Big pump to start the week, sweet little pullback, really, that you love to see, and then find support just about right where you open the week, and then go big. That's great. That's great stuff that a lot of people like to see. I personally like to see it myself. It's the thing that takes that possible trend change and turns it into something more, right? It sort of puts it on the launch pad with just a little more upside. You could really see this thing start to scamper. So beneath the surface of all this, you'll notice that on the down days, right, the volume hasn't just hasn't been there relative to the up days. the last few up sessions have been pretty strong in terms of volume commitment. So that's a minor thing these days compared to how it used to be in my book, but still prefer to see it rather than not. And right, this has really been kind of a mess here. You could call, I mean, some people I think rightfully would say this is sort of reminiscent of a diamond pattern. I don't really want to draw that all in here, but you get the idea, right? If I put this box around, well, if it lets me, I put this box around the diamond, you'll get the idea. It's not a perfect diamond by any means, but it's diamond-esque inside of here. And you can see that during this consolidation phase, right, because they haven't sold things off as harshly, the relative strength indicator is starting to perk up and starting to look better. It's only at 50.4 right now. We're 52, depending on what we're looking at. Probably 50.50. At least hold on. Excuse me 1 second. It's 51.87. So right near 52. So right, it's showing at the midway, and so that has potential. Right, it's not anywhere close to being overbought, but they really did some nice work in there. If you call it as it is, right, and you don't have a bias. So my bias last week was thinking that they would get that final horrible phase out of their system and then try to pull off what it seems like they started a week early. That's what it seems like to me. Now, sometimes when you start a week early, that's not a good thing. I mean, it really isn't. It means that you try to get something done artificially. It doesn't have to follow any particular analog, by the way, but I'm just saying, in general, when they try to start rallies a little too early in the day, maybe like 2 o'clock rather than 3 o'clock, a lot of these things tend to fail in a bear market. So I don't want to say this is doomed to fail because it seemed to start early versus what I thought. I'm just saying that it did. And we have to keep an eye out on that factor as well. But they've got the 10, the 15, the 20. They're all flatlining, starting to curl up. And that's something that's reminiscent of what we've seen naturally. This happens, of course, all the time. This is something that we saw back here. For example, if I try to enlarge this for us, they started curling things up here, right? You start to see things curl up here, and that's starting to happen. So I think we have to be respectful of this. And the mighty BMC talked about this during cocktail hour. And the natural place for this to work its way back up to, if it does get through here, does get through the 50, that's gold, the 100 there, is to work its way back up towards the high end. I'm sorry, the higher end of this expanding wedge or channel, whatever you want to call it, up towards here. And of course, that fits with what these guys are trying to do. The usual suspects, I'm sure, don't want to see a print of minus 30 on December 31st. And this is maybe their chance. And the thing is that, this is why I try to look at the calendar all the time, because now that they've got, what do they have? Let's go back to what Ryan has in Outlook. They've got the source material to work with here, right? So check this out. Let's back up here. This is right here, but look, you've got some big names coming out this week, some of the biggest of the big, and these things are a big deal. Let's take a look. There's Microsoft, right? Microsoft and Alphabet are on Tuesday. So that's big, right? Visa's no slouch itself. Texas, of course, big because and UPS, these are big because of what that means and what this means in terms of semis. There's a semi factor there, which they always wait. Then you've got Meta on Wednesday, and then you have Amazon, Intel, and Apple and McDonald's, right? All coming out on Wednesday, Thursday. You've got all those. So plus I don't want to shortchange other names, but I'm saying those are some of the biggest of the big. And naturally, right, with some of them coming out, that has the potential to move things. So they've got that. They've got the end of the month. They've got the election, and the way things look, they could get that gridlock that a lot of people don't like, but the market again seems to. And then remember that buybacks are kicking in, and then remember that you've got the seasonality, and you also have the fact that so many people hate this market, probably aren't nearly fully weighted, probably a lot of people in cash. I don't blame them, but I'm just saying these are factors, and that all does assist things. And again, probably the powers that be, whoever they are, right, they'll remain nameless. I can't really say exactly who they are, but They probably want to see things up in the next 2 weeks because that's usually how it works. And they want to see things up by year end. So I think you've got to be respectful of this. I think what you've got to do is you've got to just say, look, if this thing takes this out, I'm going to work with it until and believe it's still long-term bear, but don't be surprised, right, if these operators are able to do more with it. I'm not really that surprised anymore when it comes to what these guys are able to pull off. I'm trying to find bars to the right, get us a few more bars to the right here. But what these guys are able to pull off in the face of incredible sort of obvious shortcomings, it's just remarkable. So I don't think you can rule out in the short run, maybe the next couple of weeks, maybe 2 to 3 weeks, that they may somehow work this thing back up here, close the gap, get up towards that 200 again. And then maybe we'll see. Now, that's probably what I would say, just like mostly everyone else seems to be talking about on TV on Friday, especially, that, hey, happy days are here again. But another factor that's in their favor is we were overdone, way outside of the downside Bollinger Band, and you didn't fall all the way to the bottom of the channel. So usually when you are working in a channel or an expanding channel, in this case, usually, right, you go from side to side in some way. Well, this had a couple of different waves, and Elliott wave people that are really big into that can argue over everything that's happening in here. We still may have one more, can't say we won't, but I'm just saying that we haven't made it down there to here yet. Usually when you stop somewhere around the mid and reverse, that's usually, right, a good sign there's going to be a reversal that carries on for a while. So again, if they can get this thing, first thing they've got to do is break out of this kind of mini expanding wedge that I have drawn between this blue line and this blue line. Those two lines break out from there, and then maybe 50, then 100, and so on and so forth. Naturally, right, it looks somewhat similar, but in all the major indices, but a little bit different. And I'm not going to mark them all up, but it's pretty hard to argue with what they did here in the Dow, right? You can see that they're very close to the 50 already. They're close to the 100. It wouldn't really be a big deal, right, to tack on a few more percent and get back up towards the 200 there. You can see that very clearly. They've reversed that. The RSI continues to improve there. Let's jump back over to QQQ and then take a look at IWM. The Qs probably are the biggest laggard because, right, they were probably overvalued the most. And there's been all kinds of problems with some of those semi valuations. And there you are. I mean, there's a perfect trend line right there, if I don't say so myself. Quick draw. But still, it gets the point across. It gets the job done. You're really close there with a higher low as of right now. And the bulls freshly in control. Remember, the bears kind of took control for a little while after the high on Tuesday. That backed the market off. And now you're back where the bulls seized control for one day. If that wasn't just OPEX stuff, if it wasn't dubious OPEX activity, it's actual legitimate stuff, that's a good sign, because only within one day they're right at resistance. They will not have had to spend very much energy to work their way up and through if they so choose to do that. So I would keep that in mind. IWM will just cover these things for the record, but you get the idea. There's a higher low there, probably a little bit messy compared to the other ones, but just the simple techniques will, I think, still say just about the same thing, right? If you even go to there, right, that's close right there. It's really close to resistance. If you are willing to ignore this throw over there, and then you're close here with the higher low put in. Things are working their way up on RSI. There was big volume, again, OPEX nonsense, who knows? But this is poised to go. That's the bottom line, is these things are all poised to go. This is in the face of, somehow a lot of my stuff disappeared, which is kind of frustrating. So just bear with me. Things got moved around by Zoom for some reason when I went to record. Now they're not where they should be, so I can reference things. But let's take a look at DXY. Now, this would say, well, hey, this would look bullish, right? Right here in DXY. Let me just kind of increase the view on that. So this doesn't look very good, and it would look bullish in terms of helping the market, the dollar's coming off, and it very well may be. We have to say that, but this was really due to Bank of Japan intervening and dumping dollars, from what I understand. I was watching this on Friday, and there were all kinds of intervention news items hitting the tape. So this was not to say that it doesn't matter. It impacted the market, but probably, right, artificial. Usually when they do this, there's a temporary effect and then it shakes it off. We'll have to see. But the dollar going down generally is a positive, right? Because the dollar moving up has really been the trend of the year, I think, that and TNX, and that's not helped stocks, right? We can go back to the start of the year and you can see how the dollars really had strong performance. Same thing in TNX. TNX finished off a little bit after putting in a new high. And I think, again, that could be related, but to what we just saw. But that these are some of the big things we always check out. So that's the big stuff I would share with you. Final thing I'll note is the VIX, and one more thing after that, and then we have to wrap it up, unfortunately. But the VIX has really been rolling over, right? So the VIX has kind of been, if you want to say, sniffing this out a little bit, dawdling, but it did finish rather poorly. And some things that I do, some ratios and things I like to look at, are confirming that, you know, this is the bullishness we've seen is something I believe in a little bit more with these particular ratios working the way they are. That's all I can really say, because it's just too complicated to go into. It's not my doing. It's just something that I chart, and it just matters to me. But I'm taking it seriously for now, and I think you have to stick with those. Again, stick with the low, trade against the low. News could certainly change anything anytime soon. It's kind of weird, right? We're kind of in a weird situation with this crazy talk of World War III and all these things that do not need to happen. Just awful government people in various governments across the world, just making things miserable for regular folks who just want to live. But this is what I would do. I would say, look, if this holds these lows, or that let's just call it the 360 level, to use the SPYs, I would say, look, give it, as long as it unfolds from here and holds on, I'd give it a chance to go. It's a little earlier than I thought, because they didn't put that final whoosh in, that they started it last week, but it is what it is, and that's the market. So the thing is, that's why the market's hard, because you can there's a lot of things you could say, well, this should have happened, this made sense, I thought it didn't happen that way, didn't play out that way. So that's the way it goes. You've got to just always adjust and adapt to the situation. Final thing I want to show is this is another, well, again, this one moved too. I had everything lined up, but they all moved on me. Anyway, let me just flash this really quickly. This is a lot of stuff I like to look at just to see if the market's what's happening under the surface of the market. And really, the McClellan summation, and these are not things that you're going to say instantaneously that, oh, that helps, but McClellan summation index is improved marginally from the lows. McClellan oscillator definitely improving. Cumulative volume index improving. Right, this ratio that I like to I cooked up, I like to look at. This is also improving. You can see that. And then this here, the advanced decline line with some SMAs associated with it, it's showing a higher low, and after getting, really whooped, right, for a while, this is starting to perk up a little. So it's showing nascent signs. If I could put a trend line, it may not allow me to do that, and it's stopping me. But if I could, I would say, look, it's getting there. It's getting close. And so you've got these are all reasons why I think you have to respect what we just saw, other than the fact that we don't know if Friday was legit. I've had a hard time with this year. There's been a couple of junctures that, made it really hard, I think harder to make a call on things, because you were looking at something that you weren't sure you could bank on. Summertime activity was one of them. A couple of things right in front of a holiday, I recall. I was sort of like, I want to believe this, but boy, it's holiday action. Can I really believe that? So it's been a little tough, where some of these guys have been a little more shrewd maybe than usual, making it hard on us regular folks that are trying to read these tea leaves, as they say. But I think you've got to give them the benefit of the doubt. I think they're really poised here. And I do think it would probably take some kind of like news failure of some kind, some dramatic news that would really curtail what's about to happen here, which I think is going to be at least an attempt, at least probably a strong attempt to try to move these things back up a little bit more and break them out a little bit and go at least up to the 50 and 100, which on this chart are the gold and dash white respectively, a little bit higher. And then we'll see what happens from there. We do things incrementally anyway. So I hope this little short and abbreviated edition helped you out in some way. Thanks for tuning in. And I'll be in touch with everyone through the webinars, through the updates, through UOA Pro ideas and updates and so on and so forth. Stay nimble out there, and thanks again.